See what I gave us.
Friends, a very happy evening. Friends, today we have Dwarakanathan sir with us. Let me introduce Dwarakanathan sir to all of you. Sir joined in LIC as a direct recruit AO in the year 1993. Okay, he worked in branches including PMGS unit. Okay, and 8 years as a branch manager and senior branch manager he served, and he served as a manager in P&IR in Goa division. Okay, and maximum service he's been assigned in training. Okay, overall he is in exclusive training in different zonal training centers in that areas for almost 9 years. Okay, exclusively for 5 years in JTC training center and 4 years in STC Chennai Metro. Okay, and today central office, MB and reinsurance section, he's completed almost 1 year, and we have requested him to enlighten many doubts across the country. Our agents, SBAs, DOs, we come across so many doubts which will not be able to in general in the branches or some other people. So we have requested directly the authorized who can give us the right knowledge. So I welcome Dwarakanathan sir. Sir, today we are live streaming on YouTube also, and we have restricted participants for Zoom also. Okay, so that we will not have this thing, sir. And friends, let us welcome sir. Okay, sir, I'm just sharing the presentation.
Yeah. Yeah. Vamsi, can I start now? Yeah.
Sir, let us start, sir.
Yeah. Okay. Good evening to everyone, and welcome to this special session on NRI. I'm once again thankful to Mr. Vamsidhar for providing me this opportunity. As he had introduced me to all of you, I have a real passion for training. That's why I had the lengthiest assignment in LIC. Throughout my 28 years career in LIC, I have spent 9 years in training, 5 in Zonal Training Center and 4 in STC Chennai Metro. Way back in 2008, when I joined ZTC as a faculty member, that was the first year in which an assignment of this sort to prepare a full-fledged 1.5 hour presentation on NRI was given to me by the then principal of ZTC. I relished that moment because this NRI is one of the hottest topics as far as new business, sales and marketing is concerned. And I'm happy that I'm able to share this information to a large section of our field force, sales and marketing force. With this small background, I will just start the presentation. See, one of the most key elements that any salesperson should know as far as a non-resident Indian's new business or a sales of a life insurance policy to a non-resident Indian is about the status of that individual. One of the key columns in our proposal form, which assumes importance from the underwriting point of view, is something called the nationality. So in nationality, in the nationality column, there are 5 different types of statuses that can be displayed. I'm just going to delve at length for 5 minutes on these before I go into the actual presentation. For all of us who are living in India, who are earning in India, who are living in India, we call them as a resident Indian. Though in a shorter format, we always put them as an Indian. Basically, from government's point of view, we are called as resident Indians. So that is the first status. How do we get this status as a resident Indian? If any person lives in India for more than 182 days in any given financial year, and now I think that has been slightly modified to a higher level also, but it is not very much relevant to us. But the point is, someone who is living in India and earning in India is a resident Indian. So for resident Indians, all plans, all LIC plans, everything is available for him. All types of investment plans and savings plans and term plans are available, subject to his wealth and health. Because every insurance policy is, sum assured is based on insurance vis-a-vis income. So the first status that we understand is called a resident Indian. Now, what this person does, maybe once after 3 years or 4 years or 5 years, these people go to another country to earn and live there. The moment he leaves India and starts residing in another country, he is termed as a non-resident Indian, NRI. So in the nationality, if you come across a person whom you want to sell a life insurance policy who is not resident in India, but he comes once in a while here for either to meet his parents or to be in India for some time or something like that, and gets back to the actual place of his residence, which is outside the country, then his residential status is a non-resident Indian. A non-resident Indian is very similar to a resident Indian, except for the fact that he doesn't live in India, he lives abroad. He has the same Indian passport, he retains the Indian citizenship, and he is eligible for all types of plans just like you and me do. Now, I would like to make some small intervention here. The COVID guidelines, which has started, say, from after the March 2020 pandemic started, somewhere in June, July, August, we started this COVID guidelines. Almost 8 revisions have been made in the COVID annexure also. This is slightly a phenomenon which has come because of this present situation. In my session today, I will be talking about COVID guidelines also, but the point is those COVID guidelines are not sacrosanct. In the sense today the version 8 is available. In 1 month later, we might again revise it. Whatever happens across the world, WHO guidelines, Government of India guidelines, market practices, etc. But the point remains that this is a phenomenon which is right now prevalent. Okay, so the COVID guidelines are always applicable as it is being implemented from time to time. So now coming back to our statuses, the second status is a non-resident Indian. He is eligible for all types of plans, just like you and me do. The third status is once that non-resident Indian continues to live in that country, continues to earn in that country, then after a certain period of time, depending upon that country's requirements, he applies for a permanent residentship or a green card or a residential status in that country. Each country differs altogether about how they give that individual a status of a citizenship in that country. The moment he satisfies that country's conditions, he becomes a foreign national, FN. Resident Indian, non-resident Indian, and the third now where we have come up to is a foreign national. Now, this foreign national, as the term itself defines, he is a citizen of that country. He has given away his Indian citizenship. He might be an origin of India. He was born in India. He studied in India. He lived in India. He must have even earned for some time in India. But right now, he has obtained the citizenship of that country. Then he becomes a foreign national in totality. Now, these people might still call themselves as a persons of Indian origin. No issues about that. Because they have an origin in our country, they can call themselves. But the point is, documentary evidence, what it says, he or she will be having a foreign passport. Okay? Because he has become a foreign national. Now, per se, frankly speaking, or basically, if you take by the rule book, we don't give policies to foreign individuals at all, or foreign nationals. Why do we not give policies to foreign nationals? Primarily because those people can take a policy in that country also. Every country is having some insurance company or the other, some plans are available. They would still like to take a policy in LIC because they feel that they have a connection with India. LIC does not deny that. On a case-to-case basis, you still can give an LIC policy to a foreign national who has an Indian origin, but presently the status, if you put the nationality, you will call him as a Japanese citizen or a Chinese citizen or an American citizen or a Singapore citizen. You still can give a policy, but on a case basis, it will be dealt with because you have to specify, you have to give what exactly is his connections with India. Merely he has an origin in India is not a connection for life insurance policy. He has to have some business connections so that he can tell us that frequently he will be visiting India for this reason or the other. So based on a case-by-case basis, we still give policies to foreign nationals based on their foreign passport also. But you would have to establish a documentary evidence for his connections with India. Okay, merely he having a property in India, merely he getting a rental of from the property of India or not business connections. You would have to be very specific. He has to have some business connection, establish some business connection, and on that basis, the policies can be given even to a foreign national. Kindly note my point. You have to write based on the passport, you have to write him as a foreign citizen only. Doesn't matter. It will come to central office. We will give policies on a case-by-case basis. I mean, we'll accept it. The third is this person has become a foreign national. He still feels he's a person of Indian origin because he was born in India, he lived in India, he studied in India, his birth certificate says he's been born in India. Then previously, Government of India used to give him a status called PIO. The expansion of PIO is persons of Indian origin. In LIC, we call it as a foreign national of Indian origin. Both mean the same. In LIC calls them as foreign national of Indian origin, whereas Government of India calls them as persons of Indian origin. Both are the same. But there is a documentary evidence available because Government of India issues something called a PIO card. So the salespersons or the field force are at total liberty to ask that individual if he says that he is a person of Indian origin to show a PIO card, or otherwise called a persons of Indian origin card. Merely a birth certificate showing that he was born in India doesn't qualify him per se from our insurance point of view or from LIC's point of view as a person of Indian origin. Okay, so a PIO card or a person of Indian origin card is issued, and that's why he is called in LIC's terms as a foreign national of Indian origin. Now, what happens to foreign national of Indian origin? We do give insurance to them, but there are two major restrictions. The first restriction is that he has to be in India to take a policy. That means you cannot give him a policy when he is still there in that country. He wants to send his proposal, etc. He has to be present in India at the time of taking a policy. That is the first condition. Second condition is term plans and annuity plans are not given to FNIOs or PIOs from government point of view. From government, they call it PIO. We call it as FNIO, Foreign National of Indian Origin. FNIOs or Foreign National of Indian Origin are not eligible for term plans or annuity plans and annuity plans. They are not eligible for that. You might ask me a question, why is it so? They have an Indian origin. But the point is, an FNIO, as the name suggests, is still a foreign national. He continues to hold a foreign passport. He is a foreign citizen or a citizen of that country. Because he has that country's passport and he is a citizen of that country, he is eligible for social security benefits of that country. What exactly are the social security benefits? Health, pension, residence, or whatever you call it, all those things he is eligible. So that is why per se it's a policy that we do not give term plans and annuity plans for FNIOs. Now we have seen 4 statuses: resident Indian, non-resident Indian, foreign national, and now he's a foreign national of Indian origin. He still says, I still have the tag of foreign national. I just want to get a connection with India based on my earlier stint here. So give me back my Indian citizenship also. There comes the 5th status called OCI, or otherwise called Overseas Citizen of India. OCI cards are issued, are available. The 5th status a person acquires is something called a OCI, Overseas Citizen of India. In crude terms, it can be put as a dual citizenship, suggesting he continues to retain the citizenship of that country, but also gets Indian citizenship. But there are restrictive sort of a benefits that is given in this OCI. The biggest benefit that he is getting is visa-free entry into India. FNIOs have to have a visa worth of around 15 years or so. The visa is given. During that period, they have to again renew it if it is over. But OCI card holders or overseas citizen of India have the benefit of a visa-free entry, but they are not eligible for certain benefits just like a normal Indian citizen does. But an OCI card is available. He continues to hold the foreign passport. He gets an OCI card, Overseas Citizen of India. For many practical purposes, from government point of view, OCI is treated as NRI. But in LIC, there are some restrictive elements are there. But these are the 5 statuses which any salesperson should know about the status of a non-resident individual or a non-resident Indian. Everyone is not an NRI. Mind you that Everyone who comes from outside who has previously lived in India is not an NRI. So the first question an agent or a sales force or a field force should ask to a person is, what is his status? A resident Indian, all of us know. The second is a non-resident Indian. The third is a foreign national. The fourth is an FNIO or a foreign national of Indian origin. The fifth is called OCI or Overseas Citizen of India. Overseas Citizen of India is a OCI card holder who per se is having dual citizenship. He continues to retain the citizenship of that country where he is living now, outside Singapore, Japan, China, Australia, USA, you call any countries. And he also gets an Indian citizenship, at best a restrictive sort of an Indian citizenship benefits. That is why he's called an OCI or Overseas Citizen of India. OCI cards are available. The card, just like a passport, an OCI card is also available. Or in passport also, first page if you open, it will be written as Overseas Citizen of India. So these are the 5 statuses. On this basis, the salesperson should primarily ask, don't make any guess. Please do not make any guess. Many times people come and ask me, sir, he seems to be an Indian origin. He seems to be an NRI. He seems to be a permanent resident of that country. No, I don't want all those things. You don't guess. You please ask that individual himself. The individual knows everything because he has the documentary evidence. And not only ask him, even if he tells, ask him for a documentary evidence. That is the first requirement. I hope I have made it very clear. This is where a salesperson should start. Do not guess, ask, get a documentary evidence. That person knows better what his individual status is. So these are the 5 statuses. Okay. With this basic background with us, we will go ahead with the presentation. Yeah. Next slide, please. Now, why do we say a non-resident Indian as a high net worth individual? He is the most successful, they are the most successful Asian community in the world. Mind you, in every sphere of influence, they are available. Be it politics or be it business or anywhere as for that matter, they are the most successful Asian community in the world. Yeah, next. They are numbering 3.32 million, 3.2 crores as on date. Every year, 25 lakh Indians migrate overseas. Can you imagine the volume of the Indians who are going abroad and who are earning there and who are a potential for us as far as insurance is concerned? So every year, the statistics says 25 lakhs Indians migrate. And as on September 2020, the total deposits brought by these overseas Indians to India is 9,77,309 crores. 9,77,309 crores is the total deposits that these outside Indians who are living abroad has brought into India, suggesting they are very keen to bring their earned money into India and investment make the investment in India. And you know how this volume can be ascribed to? It amounts to 33% of India's external debt and 65% are rupee denominated, suggesting this amount which is brought in by foreign exchange, they come to India, get converted into Indian rupees, and they are investing in such of those instruments which are Indian rupee oriented. The insurance policy issued by Life Insurance Corporation of India in India is an Indian rupee denominated policy. We don't issue foreign currency policies at all. In India, across all 2048 branches, 112 divisions, and 8 zonal offices and 1 central office, we issue life insurance policies in Indian rupees only. Our subsidiaries outside international operations, they issue in their currency. But LIC of India issues Indian rupee policies, and all NRIs, they bring money from outside in foreign exchange, convert it into Indian rupees in India and invest in India. Okay. And if you see the population across various countries, almost every country you name, every country that participated in the Olympics, you will have an Indian population there. So that is the length and breadth with which our NRIs are living and earning in those countries. Any country you name, you will have the people there. These are all live statistics, very dynamic statistics. Anytime you go into Google, you will be able to get it. Yeah, next. Now, we will come to the most important thing that any NRI is going to ask. The first question he'll be asking us is, what is the basic tax implication? Okay, what do you mean by basic tax implication? How exactly his investment is taxable or is he getting a exemption in that? The first and foremost tenet is NRI's income earned and received outside India is not taxable in India. For an NRI, the income he earns outside or received outside India is not taxable in India. How? Because there is an agreement called Double Tax Avoidance Agreement, DTAA. Double Tax Avoidance Agreement, Indian government has entered into many countries across the country, across the world. There are certain countries which are tax havens. India doesn't enter into a contract with them. But most of the countries, India has entered into an agreement which is called Double Tax Avoidance Agreement, suggesting an Indian or an NRI who is earning amount there, he pays tax there. Subsequently, after post-tax, the surplus that he is having there, if he brings it into India, it is not taxable in India. That is the Double Tax Avoidance Agreement. Whereas resident Indian like us, the income earned and received outside India is taxable in India in addition to the income earned in India. Actually, I am earning an income in India, which is taxable. I pay tax as per the tax structure prevalent in India. If I get some foreign income, rent or pension or my earlier employment, some sort of a benefit keeps coming to me, it's a foreign income. If it comes to India, it is treated as income and I have to pay tax on that. This is the difference between an NRI and a resident Indian. For an NRI, the income earned and received outside India is not taxable in India because of the DTAA or the Double Tax Avoidance Agreement. Whereas for resident Indian like us, our Indian income is taxable, our outside income also is taxable. Now, the biggest question is, what happens in an LIC policy? Vamsi, can you just go to the previous screen, please? Yeah. What happens in an LIC policy? Now, for a resident Indian, we have two types of tax exemptions. One is the tax exemption on the premium that we pay, ATC for regular policies and ATD for health insurance policies. We also have a tax exemption on the maturity or the claim, which is section 1010D. If you go into the Income Tax Act and look at the section 1010D, it has been evolved over a period of time. It says as of now that if the premium under a life insurance policy does not exceed 10%, today's rule I'm telling you, if the premium under a life insurance policy does not exceed 10% of the risk sum assured, mark my words, I'm not saying only sum assured, I'm saying risk sum assured. If the premium under a life insurance policy in India does not exceed 10% of the risk sum assured, then whatever amount comes as maturity or SB with bonuses, with FAB, with loyalty additions, whatever it may be, it is not taxable in India. That is section 1010D. Why I said risk sum assured? Because in plans like Jeevan Anand, Bima Shri, Jeevan Shiromani, etc., your sum assured is 125%. That is death sum assured. Basic sum assured is 1 lakh. Your death sum assured is 125%. So the 10% of the premium limit for section 1010D is applicable not on the basic sum assured, it is applicable on the risk sum assured only. That is income tax law. So an Indian like me gets ATC and ATD exemption subject to the limits available, and section 1010D also if my premium does not exceed 10% of the risk sum assured under the plan that I am taking. Now the biggest question is, there is an NRI on one count, there is an Indian on the other count. Both are of the same age, 30. Both take the same plan, 914, new endowment. Both take the same term, 21 years, 21 years. What do you think will be the premium? Same age, same sum assured, same plan, same term. The premium is the same. As of today, right now at around 6:30, if the time may be, right now, the GST is being paid on the premium by an Indian also and a non-resident Indian also, suggesting there is no change in the premium that is being paid vis-a-vis the sum assured as far as an NRI or a resident Indian is concerned. So, if a resident Indian gets tax exemption under section 1010D, maturity is not taxable because his premium is less than 10% of the risk sum assured. Then, if the same premium is applicable to NRI of the same age and same sum assured, his premium also is within 10% of the risk sum assured. So, he is also eligible for section 1010D. That is what I want to drive home. That means the rules that are applicable as far as income tax is concerned to resident Indians, the same are applicable to non-resident Indians also. Okay. In single premium, what happens? In single premium, if the premium exceeds 10% of the risk sum assured, in most of the single premium, it will do so. Then for resident Indian also, the maturity amount, that is gross maturity amount minus the single premium he has paid, the balance or the net amount is taxable income. For NRIs also, if he takes a single premium, there also his premium is more than 10% of the risk sum assured, then for him also the net maturity amount, that is gross maturity amount minus the single premium, the net amount is taxable for him also. If it is taxable to non-resident Indian, it is taxable to NRI. If it is not taxable to resident Indian, it is not taxable to non-resident Indians also. If you want proof of that, yeah, go to the next screen, Vamsi. The next screen, this is a circular issued way back through CRM, deduction of income tax at source from sum payable under the life insurance policy to non-residents in terms of Section 195 of Income Tax Act. Section 195 of Income Tax Act says how exactly the income tax has to be deducted at source. If you see the last line, if the policy is not exempted under Section 1010D of Income Tax Act, when the policy will not be exempted under Section 1010D, if your premium is more than 10%. If the premium is more than 10%, not only it is not exempted for NRIs, it is not exempted for resident Indians also. For me also, if my premium is more than 10%, my maturity, the net maturity is also taxable. So the rule is clear for both resident Indians and non-resident Indians. So if 1010T is applicable under one particular premium, vis-a-vis its sum assured, then NRIs also will get that. Okay, next screen, please. See, there was a change. Up to 31/3/2012, the Income Tax Act said your premium should not exceed 20%. Then from 1/4/2012 onwards, it was brought down to 10%. The same rule holds good actually. Whatever Income Tax Act or law says that is applicable to resident Indians, same is applicable to non-resident Indians also. Okay. So this I wanted to make clear. You can very well quote this circular because this is issued by LIC only, and you can tell the customer also, because many customers are aware of the DTAA. Many customers might be aware of this also, but the point is Section 1010D applicability, whether it is there. Okay. Yeah, it is available. Any sum received under a keyman insurance, normally keyman insurance is not allowed. If the policy is non-exempted under Section 1010D, I was talking about single premium plans. If under single premium plans, if the premium exceeds 10% of the sum assured, then it is not exempted under 1010D. For the resident Indians, there is a threshold limit, 1 lakh. Whereas for non-resident Indians, there is no threshold limit. Threshold limit is minimum 1 lakh we will not touch. Over and above that, we will deduct tax at source. Whereas for non-resident Indians, there is no threshold limit, suggesting if it is not exempted under 1010D, that means mostly single premium plans or even savings plan, it can come where your age is the highest age allowable under the plan and the term is the lowest term. There is a possibility that premium might go beyond 10% also. In that case also, without any threshold, without any minimum limit, the entire amount that is taxable, tax deduction at source will take place for NRIs. But the point is clear, except almost all plans, leave alone single premium plans, all regular premium plans, savings plans will have the premium less than or equal to 10% only. That is how the premium chart or the tabular premium is designed for our plans. Okay, this is applicable in Jeevan Shiromani also. Okay, Jeevan Shiromani, you should take the 125% risk sum assured only. Yeah, next screen, please. Now we come to the most important element about the bank accounts that are handled or used, operated by non-resident Indians. There are 3 types of bank accounts that are permitted. The first is called a NRO or a non-resident ordinary. What exactly this account is? Prior to he becoming an NRI, he was a resident Indian. At that time, just like you and me, he was having a savings account or a current account or a fixed deposit or a recurring deposit. The moment he becomes an NRI, the rule says the non-resident Indian should inform the bank manager that his status has changed from a resident Indian to a non-resident Indian. The moment bank manager comes to know about this, immediately whatever savings bank account or current account or fixed deposit or recurring deposit, whatever he was having, the non-bank manager turns it or converts it into only by name called a non-resident ordinary account. So you and me as resident Indians, we will be having a savings bank account in a bank, the same savings bank account a non-resident Indian will be having, but it will not be called a savings bank account. It will be called a non-resident ordinary account. These accounts are operated and held in the banks in India. I am not talking about banks that the non-NRIs are having in a foreign country. No, it is the same banks only, Indian Bank, Indian Overseas Bank, Corporation Bank, Canara Bank, whatever bank you call it. Ours is called a savings bank account. Theirs is called a non-resident ordinary account. The next account that newly he can open is called a NRE or a non-resident external account, non-resident external. The third account that he can use or operate or open is called an FCNRB. The expansion is foreign currency non-resident banks. These are the three accounts that a NRI is permitted to have in India in all the banks in India. NRO, NRE he can open next, and FCNRB. Kindly note, there is nothing called an NRI account. NRI is a status. NREO is an account. NRE is an account. FCNRB is an account. We should be very clear on this. Now, why should an NRI have three different bank accounts? There is a difference between these accounts. Yes. What is the difference? The difference is based on repatriation. What is the meaning of repatriation? The money being sent from India to a foreign country, or money being brought from outside the India to inside India. This is called repatriation. So ordinary accounts, that is NRO, the existing savings bank and or current account which the NRI was previously having, now because of his status change as an NRI, the bank manager has changed it. That account NRO, otherwise called an ordinary account, does not have a repatriation facility at all, suggesting from that NRO account, the NRI cannot transfer money from India to outside, or nor he can bring money from outside into India. There are certain rare exceptional circumstances in which the repatriation of money from NRO account to outside the country is allowed with a special permission of the RBI. But basically the rule says ordinary accounts are those accounts which are non-repatriable accounts, suggesting in an NRO account, you can neither bring money from outside nor repatriate or take away money from here to outside. Whereas the other two accounts which he opened, NRE, non-resident external, and FCNRB, foreign currency non-resident bank scheme, these two accounts are called external accounts, suggesting they have full repatriation facility, leaving a minimum balance that is required in those accounts. The balance, entire money can be taken outside, or any amount of money can be brought in inside. That is why these accounts are used, these accounts are opened. If an NRI wants to bring money or transfer money from here to his country, he has to use an account called NRE or FCNRB. The first difference is based on repatriation. What is the second difference? The second difference is based on the currency of account in which the balances remain in those accounts. NRO and NRE are called Indian accounts only. They are in Indian rupees only. One is a non-repatriable ordinary account. The other is a fully repatriable external account. But both the accounts, the balances remain in Indian rupees only. I will give an example. NRO is just like your savings bank account. It doesn't go outside, nothing comes inside. So only it revolves inside India. So only Indian rupees. So NR account is basically revolving in Indian rupees only. Balances are in Indian rupees. What happens to NRE account? The person has newly opened this account. He goes abroad, works for 2 years there, and he wants to send some money to his people in India. Now, the only way he can repatriate or bring money from outside to India is in this NRE account. So he is having some $10,000. He immediately makes a wire transfer from that account, that foreign account he's having in that foreign bank, $10,000 from there, and it comes and sits through wire transfer in NRE account. So the moment it comes into NRE account, $10,000 based on the foreign exchange rate applicable on that particular day, the bank manager in India converts that $10,000 into rupees. Let us say 65 rupees. So 10,000 into 65, the balance is kept as 6,50,000 rupees. So it will be held in rupees only. Tomorrow, 1 month later, he wants to take the balance money from NRE account to that country. Imagine 2.5 lakhs is available. So 2.5 lakhs, he gives an advice to the local bank manager here that he wants to repatriate this amount to USA. 2,50,000, leave alone the balance that is left there. 2,50,000 divided by on that day, what is the foreign exchange rate? It is converted into dollars and it is wire transfer is sent to that country. So NRE is the account in which money comes inside from foreign exchange, it is converted into Indian rupees, or when it goes outside from Indian rupees, it is converted into foreign exchange. The bank manager does that based on the applicable foreign exchange rate on that particular day. So it is very clear that NR account and NRE account held by a non-resident Indian in India are Indian rupee accounts only. So they can issue a check. If they issue a check, it is an Indian rupee check only. That is why at the cash counter in the branch office, the NRI can pay his premium, deposit, renewal premium, whatever it may be, single premium through an NRO check or an NRE check, because both are Indian rupees only. NACH previously, right now e-NACH, in all those things, NRO and NRE accounts are allowed. Okay, so NACH and e-NACH, NRO and NRE are allowed because they are Indian rupee accounts only, and LIC receives the money in Indian rupees only. Now, in that context, I will take a small deviation and give you one important information. Now, what are the various remittances that are allowed across the cash counter in India? You can pay through Indian rupees, hard cash, well and good. You can pay through SB account or current account of an Indian account. Okay, they are in Indian rupees. You can pay through NRO account. You can pay through NRE account. They are also Indian rupees. Can you tender foreign exchange dollars or euros or Japanese yen or Australian dollars across the counter? No, it is not allowed. We don't entertain currencies of foreign countries. But can you issue a check or an instrument in foreign currency? Imagine you have a check which says $268 or 350 yen or 650 Kuwaiti dinar. Can you give that sort of a foreign currency instrument? They call it as a foreign currency instrument. Can you tender foreign currency instrument or foreign currency check for proposal deposit or single premium or renewal premium? The answer is yes. But the answer can be qualified saying not across the cash counter. You cannot give this check, foreign currency check or foreign currency instrument across the cash counter. You have to give it to the officer concerned in the branch office in accounts department. The officer has a register called foreign currency remittances register. In that, they will make an entry of the check number. You will get, that is, a customer will get a white paper acknowledgement. No receipt is drawn. White paper acknowledgement saying that under this check number, under this date, this currency, this amount has been received for either proposal deposit or renewal premium, etc. Mind you, it doesn't mean the risk is accepted. No, the foreign currency, the only a white paper acknowledgement for having received the instrument. That's all. The foreign remittance received, the register is maintained there. On the next day, a separate challan or pay-in slip is prepared by the accounts department of the branch office. The check is enclosed, that foreign currency instrument check, and remitted in our bank. Every LIC branch has a bank in which the daily collections are remitted. It will go to the international center in Mumbai. Then 7 days, 8 days, the amount gets realized. Yeah. Friends, kindly mute your mic, please. Kindly mute your mic. Yeah. Now the check goes to the international clearing operations, then comes back 7 days, 8 days later. When it comes back as Indian rupees based on the foreign exchange rate and credited to our bank account of LIC. Then immediately the accounts officer, every day they will check with the bank to find out whether the remittance credit has come. The day the credit has come, whatever credit, realizable amount, that is called a realizable amount. That realizable amount, for that, a receipt is drawn at the cash counter. We should be aware that with foreign exchange fluctuating, whatever you gave 7 or 8 days before, that will not be considered. The day on which the credit is given, whatever exchange rate is applicable, that only will be the realizable amount. So sometimes, depending on the fluctuation in exchange rate, whatever you pay could be less than what you intended to, or it could be more than what you intended to. So we have learned now that foreign currency instrument or foreign currency check can be remitted at the branch office, not in the cash counter, but with the F&A accounts department officer, who will provide you the realizable amount 6, 7, 8 days later, depending on how soon that comes. Okay. But NRO and NRE are Indian accounts only. Sir, previous screen, please. Yeah. FCNR, it's a specified foreign currency, US dollars, pounds, sterling, Deutsche marks, euro or Japanese yen, Canadian dollars, Australian dollars, Singapore dollars, and Swiss francs. These are all allowed. Any currency can be brought in, but those are all converted into these currencies and kept in foreign currency non-resident bank account. Yeah, next screen. Now, what exactly is an FCNRB? Foreign currency non-resident accounts bank scheme. It was introduced with effect from 15 May 1993. It's a deposit scheme with a fixed maturity period of 3 years. Basically, this FCNRB account is a deposit account with a fixed maturity period of 3 years. Banks are not bound by RBI guidelines on using this money for lending or investments. That is, based on their expertise in investments, they alter the interest rates. RBI does not guide them on what exactly should be the interest rate. If you go to Google, put FCNR FDs, every brand will give you, it's a dynamic, every day it changes. Yeah, next screen, please. I have taken a sample of one bank. You see here FCNR FDs, tenure 12 months to 24 months, depending upon the period of the deposit, US dollars, Great Britain pound, euros, Japanese yen, Canadian dollars, Australian dollars, CHF is Swiss franc, all those things are available. This is the interest rate that is given on these deposits for so much duration. Okay. Now, what is the tool with us? This FCNR, partly or fully or any amount, we should tell the policyholder or the NRI to shift or transfer from these FCNR FDs to our annuity policies or any other policy. There lies our, so this is a good marketing tool for us. I'm sure every one of you are able to calculate the IRR under a life insurance policy, internal rate of return. Now, based on the internal rate of return on projected bonuses, you can compare the returns that you might get in a LIC policy vis-a-vis this FCNR FDs, or even you can show the annuity rates available in Jeevan Akshay 7 immediate or deferred annuity of Jeevan Shanti, and you can goad and motivate the policy NRI to convert some or part or full of the FCNR FDs into our accounts. Okay, so this is a tool which you have. You can hit a you can put an arrow on this and try to convert this into our life insurance policy. Yeah. NRIs can invest in only 5 asset classes in India. These are the 5 asset classes: bank deposits, stocks, mutual funds, real estate, and last but not the least is insurance. RBI guideline says these are the 5 asset classes which are available for NRIs. Now, you might ask me, sir, there are umpteen other asset classes available. Why is it that only these 5 are eligible? The point is, with the money he is bringing from outside, that is through an NRE account, non-resident external account, these are only the 5 asset classes which is available. If he uses an NRO account, which is an Indian rupee account, anything is allowed. But if he brings out from outside foreign exchange and converts it into Indian rupees through an NRE account, these 5 are only available, and each asset class has a regulation. But today we are going to see only the insurance regulation because that is our concern. Each one has separate regulations. RBI has given separate regulations for each of these asset classes. Today we are going to see if a person wants to bring foreign exchange into India, convert it into Indian rupees and invest in insurance, what does the regulations say? Okay, yeah, next screen. Presently, investments are not allowed in PPF for NRIs. Bringing money from outside, I'm telling you, PPF, NSC, Kisan Vikas Patra, it is not allowed. RBI has excluded NRI investments in agricultural land, farmhouses, and plantations. This is just a basic rule, okay? We need not delve deep into it. Now, the first part of my presentation is over. I have given you some basic facts. Statuses, 1, 2, 3, 4, 5. Bank accounts, 1, 2, 3. How Indian rupee accounts are held. How foreign currency instrument can be paid, all these things. And tax implication also. These are certain knowledge-based information which I have given you. It is absolutely required if you want to be on a level playing field when you are talking to an NRI about on a sales pitch. Okay. Now we come to the second most important part, which is Foreign Exchange Management Regulations 2000, otherwise called Life Insurance Memorandum. This is a foreign exchange management regulations on life insurance. That is why it is called Life Insurance Memorandum. It talks about how in life insurance, how these foreign exchange can be managed. This is a circular issued way back in 17/1/2003. January 2003, some 18 years back, almost 19 years back, it has been issued by the Reserve Bank of India's Exchange Control Department. It is a circular. Now, the first question is, if Reserve Bank of India issues a circular from its Exchange Control Department, to whom it is directed to? Is it directed to LIC? No. Is it directed to SBMs of LIC? No. Is it directed to development officers? No. Is it directed to agents? No. Is it directed to policyholders? No. It is not directed. These are information that all these stakeholders should know, but they are not directed to them. The circular issued by an apex bank, Reserve Bank of India, is directed to the banks which are dealing with foreign exchange. That means all these banks, Indian Bank, Indian Overseas Bank, Corporation Bank, Canara Bank, SBI, you name any bank, which of those banks that are authorized by Reserve Bank of India to deal with foreign exchange, this circular is intended for them. And all these banks which are authorized by RBI for dealing with foreign exchange, they are called authorized dealers. AD, if you go anywhere, they will see authorized dealers means these are dealers or banks or financial institutions which are authorized by RBI to deal with foreign exchange. Apart from these banks, we have this Western Union money transfer, money exchange offer. All these are authorized dealers. This foreign exchange management regulation circular is intended for them. Now, what this circular says, next screen. Yeah. The scope of this is, it talks about issue of life insurance policies in rupees and foreign currencies to non-residents. As I said before, we issue only Indian rupee policies. We don't issue foreign currencies. Okay, fine. Next. It talks about collection of premium. Next, it talks about settlement of claims. It talks about maintenance and operations of foreign currency abroad. And it talks about reinsurance. It's a 6-page circular issued by RBI. It has a wide scope. But what is applicable to us? Only those two. Investment of surplus funds abroad and allied matters. But what is applicable is the one that I have underlined. Collection of premium and settlement of claims, suggesting this RBI circular tells banks as to how a foreign exchange can be brought in to pay premiums in a life insurance policy, and how when claims are settled by the insurers here, how that money can be taken outside or converted into foreign exchange. Fine, you have got the idea. Foreign exchange converted into Indian rupees to pay premiums, maturity claim amount paid in Indian rupees converted into foreign exchange. Now I'll give a small example. Yeah, just take this example. Sum assured is 5 lakhs. Premium yearly 35,000. Just an example, an NRI has come to India. You have canvassed a policy. He wants to take a 9-14-21 plan. I'm just giving an example. The bonuses at and FAB after 21 years is, let us say, 4,75,000. It is just a projected bonuses. Now, the first installment, along with the proposal, he has paid through cash or through NRO account. Okay. Now, if he pays through cash or through NR account, it is deemed as Indian rupees per se, because cash is an Indian rupee and NR account per se is an Indian rupee account. First installment he has paid. Fine, policy is issued. He goes abroad. From the second to the second installment, he wants to pay from there. Yes, LIC has provided a lot of opportunities now, alternate channels of premium payment through which he can pay the premiums. www.licindia.in through portal he can pay. There is something called a direct debit is there. All these things he can pay. Let us presume he wants to pay from there. If he wants to pay from there and send money from there, the only way he is handling foreign exchange, that currency there, the only way he can send from money there, from there to India is through an NRE account. Okay. So 2nd to 15th installment, which are 14 installments altogether, let us presume he pays through NRE account. Now, for caution, I would like to be cautious here to say, we are not suggesting that he has to use this particular account only. No, that is not our intention. I know that people pay through their father's account, through their mother's account, through their sister's account, through their brother's account. We have no restrictions at all. But I am giving you what the regulation says and how it will be helpful. So first installment he has paid through cash or Indian rupees. The 2nd to 5th, by virtue of he having used NRE account, which is foreign exchange primarily when it comes into NRE account and then converted into Indian rupees, those 14 installments are deemed as having paid in foreign exchange only. I will repeat. If he pays through an NRE account, because in NRE account, the foreign exchange comes from outside and sits and then converts into Indian rupees, it is deemed as being paid in foreign exchange. So 2nd to 15th installment, he pays through NRE account, means 14 installments he had paid through foreign exchange as per bank's statement, okay, as per bank's records. Now 16th to 21st, due to some reason or the other, either he was holidaying at that time when the premium got due, or his father helped or someone helped, he has paid through cash or through NRO account. So the last 6 installments is deemed as having been paid in Indian rupees. Now what happens? Out of 21 installments, 7 installments first and the last 6 he has paid in Indian rupees. The middle 14 installments he has paid in foreign currency, because though it has come to India, when it comes to LIC, it is in Indian rupees, still originally it came in foreign exchange, got converted by the bank manager into Indian rupees and came to us. Now maturity has come. 5 lakhs plus 4 lakhs 75,000, 9 lakhs 75,000 is there. Now LIC asks for a NEFT master. Now the point is, there are 3 situations which can happen. What are the 3 situations? On the date of maturity, I'm telling you. The NRI would have become a foreign national, would have become a foreign national of Indian origin, would have become an OCI, or remained as a foreign national itself, established his family there, his children are studying there, he doesn't want to come to India at all. 95% of the people who go abroad do not come to India. That is a statistics. Now what he wants the entire maturity amount to be taken to that country, because he would like to use it for children's education or build an asset or whatever it may be, his reason. Now, that is the first situation. He wants the money entirely to be repatriated back to that country. Okay, that is first thing. Second situation is, he wants that money fully to be used for his parents here in India. He says, I took this policy only for their benefit. Doesn't matter, now the maturity has come, I will use it in India, so I would like to use it for my parents only, so let it be in India, I don't want it repatriated. Okay, first is he wants repatriation, second is no repatriation, because he wants to utilize in India. The third is, he himself has come back to India maybe in the last year, 16th, 21st year, 20th year. He came back to India thinking that, okay, enough is enough, I want to settle down in India only. So he has come back to India. Now he wants that money here to do some investment or use it for some purpose. Now these 3 purposes, all these, what will happen 21 years later, no one knows. The NRA, if you ask him also, he will say, I don't know what will happen in 21 years. On that day only, I will be able to tell. Even an agent does not know. LIC does not know. Nobody knows. But if first situation, if he wants, is, before I go to that, in this situation, I will tell you what happens. Okay, he has paid 7 installments in Indian rupees, 14 installments in foreign currency. Let us take the first situation. He wants the entire money to be repatriated. Now, what LIC will do? LIC will ask a NEFT master. If he gives NRE account along with the NEFT mandate, along with the NEFT mandate for maturity remittance, it will ask him, kindly give us a bank statement saying all these accounts, all these premiums have been paid in foreign currency only. If the NEFT mandate is given for NRE account by the policy holder, that means he wants that money to be put in NRE account from where he can transfer it to that country or repatriate. Then LIC says, if you want it in NRE account, you give us a bank statement saying all the 21 installments have been paid in foreign currency only. Now what will happen? If he goes to the bank will have a record, all 21. You will be asking me, don't we have a record? We have a premium history, I understand. But that premium history says only cash or check. It doesn't say which bank account. We don't know which bank account. Either it is a check or a cash, that's all. Which bank account from which he has paid, only the bank will have. The bank will surely have that record. But here, the bank will give a statement saying 14 installments have been paid in NRE account, whereas 7 installments, either he has paid in cash, means bank will have no record at all, or if he has paid in NRO, bank will say he has paid in NRO. Then what happens? LIC will not accept the NEFT mandate of NRE account. You can give only an NRO account only. Only an NRO account, suggesting the entire amount will remain in India only and you cannot repatriate to that country. Or now the NRI will become annoyed. He will say, no, I will take it up with the bank actually. You please give me a check. Even now, in extraordinary circumstances, with the permission of the senior divisional manager, a check can be drawn for a maturity. You have to give the extraordinary circumstances, not just like that, that I want a check. You cannot say that. This NRI says, no, sir, I'm living there only. I'm not coming to India at all. So please give me a check. I will hand it over to my bank manager, and bank manager, I will ask him to remit in NRI. What does this regulation says? Click, Vamsi, just make a click. Yeah, what it says, for the RBI regulation says, yeah, stay here only, yeah. The RBI regulation says the bank manager will see the total remittances done in the last 21 years. He finds from his record that 14 installments are paid through foreign exchange, through NRI account, 7 are paid through Indian rupees. So the RBI regulation per the circular says, tells the bank manager, proportionately 14 by 21 into maturity amount. The bank manager is not supposed to bifurcate what is the sum assured, what is the bonuses. No, that is not his concern. Total maturity amount. 14 by 21 into maturity amount will go into NRI account. He can credit it into NRI account. The remaining 7 by 21 into maturity proportionate amount, the bank manager, as per the circular, will put it in NRO only, because those proportionate premiums have been paid in rupees only. This is as per RBI's rule, as per this circular. The bank manager cannot avoid it. But if the NRI wants the entire amount, all total amount to be paid into NRI account, what he should have done? He should have paid all his installments right from the beginning, from the first proposal deposit onwards, in NRI account only. This is the most important thing I want our sales force to tell the NRI before he signs the dotted line on the proposal form. Before he signs, you have to tell him, as per exchange control regulations, as per Foreign Exchange Management Act, as per LIM Life Insurance Memorandum, if you pay in NRI account, you will take back the entire maturity amount or any claim amount as for that matter into NRI, and from NRI you can repatriate. Okay, I will repeat once again. If all installments are paid through NRI account, then the entire claim amount, be it maturity or death or surrender or whatever it may be, can be remitted into NRI account. And from NRI account, any amount you want, he can advise the bank manager to repatriate it to that country. Now come back to the situation. First situation, he has become a fully foreign national. I told you, had he paid in NRI account, entire amount would have gone into NRI account, then the whole amount can be transferred. If he wants the second situation where he says, I want this money to be utilized for my resident parents here, no issues. Ask him to give either an NRI account or an NRO account. For us, both is applicable, because he has paid the entire premium in NRI account. The entire premium is paid in NRI account. So he can either give an NRI account or he can give an NRO account. We will remit the entire premium here. NRO account he can utilize for his parents. If he comes back to India if he had come back to India in the last year, he becomes a resident Indian, then his NRE account and NR account is converted into SB account like us, and LIC will always accept the NEFT mandate for SB account. So any situation that happens at the 21st year or on the date of maturity, if the NRI wants whatever he wants to be done at that point of time, tell them to pay the premium right from the beginning, proposal deposit onwards till the end, through NRI account only. Now, someone was asking me in the chat as to what happens to Umang. Same thing, 15-year term. Umang premium paying term is small, na? 15, 20, 25, 30. He takes a 15-year term, pays all the 15 years right from the 1st to the 15th in NRI account. First SB, give the bank statement to LIC of all those 15 years, give a NEFT mandate for NRI account. All the SBs will be 1, 2, 3, 4, 5, 6 every year. Annual SB will be credited into NRI account. This is applicable for pension plans also. Jeevan Akshay immediate annuity or Jeevan Shanti deferred annuity. Single premium he is paying. Ask him to give an NRI check. The NRI check, Xerox copy of the NRI check and first page of the passbook of the NRI account, both along with the NEFT mandate for NRI account. Ask them to give it along with the proposal form. LIC will accept it, create a NEFT master for this NRI account because he is paying the single premium in NRI account only. And from the next month onwards, whatever pension is remitted, to be remitted, it will go directly into NRI account. If he misses even one premium, mark my words, out of 21 premium, unknowingly or knowingly, you didn't tell him or he didn't know, even if he pays only one premium in an Indian rupee account or NRO or cash. I know that some NRIs are still having SB account also, which is against the law. I'm not going to delve into that. If he has paid through SB or something, even if one account is not through NRE, one premium is not through NRE, LIC will not accept. LIC will pay through NR account only. He has to go to the bank, and the bank also will do the same proportionate. And then whatever, in this case, 7/21, which has gone into NR account, if he wants that also to be remitted or repatriated, the NRI has to take a special permission in RBI through the NRI cell, and then only he can do. So tell them, so that is upfront, beginning at the proposal stage itself, tell them they have to use NRE account for any practical purposes. Anything that happens, any type they want, the situation in the 21st year on maturity, anything he wants at that point of time, if he uses NRE account, he can be very sure that he can either repatriate or keep it here or whatever he can do. This applies to all types of claims. I think I have made myself very clear. You have the proceeds of policies denominated in foreign currency or the rupee policies for which a premium are paid in foreign currency or out of NRE FCNR accounts are now permitted to be credited back to NRE FCNR account of the non-resident without prior approval of Reserve Bank. The circular gives at best permission to the bank manager to see his statement and do it accordingly. Previously, before 2003, Reserve Bank of India used to give a permission in each and every case. Post 2003, the bank manager can do it. Imagine FCNR deposits is closed and you give a foreign currency. Now I have told you also that foreign currency instrument can be paid in the bank, in our branch also. So he can pay foreign currency instrument, no issues. We ourselves are having a remittances received register, or you can also show them through the bank, the foreign currency non-resident check that you have paid all these things to foreign currency or NRE. So this is the basic rule. If the person wants his money outside India, then he has to necessarily use an NRE account or through FCNR account. Yeah, if he pays through NRE account, he can get in NR also. LIC will not have any difficulty in remitting the maturity amount, claim amount in NRO, because it is going to remain in India. For us, there is no difficulty in remitting to NRO. For remitting into NRO account, you need not give any bank statement, nothing. But if you want to be remitted into NRE account, you have to give a bank statement. And again, at the cost of caution, I am not suggesting LIC will not give credit maturity, it will not pay. No, I am not saying that. You can get it in SB account, you can get it in NRO account easily. But if you want it in NRE account, then you should get the bank statement and you should have paid all the premiums in NRE account. Okay, fine. This is applicable to pension plans also. Settlement of claims, rupee denominated policies, payment in foreign currency permitted in proportion to the amount of premium paid in foreign currency to the total premium payable. That's why I said 14 divided by 21, 7 divided by 21. These are things which I have taken directly from the RBI circular. I have not used my words. Okay, these are very much available in the circular. I have given you the circular number also. You can go and check it in Google. Yeah, next. Maturity proceeds, surrender value in respect of rupee life insurance policies issued to non-resident Indians for which premia have been collected in non-repatriable rupees. What is non-repatriable rupees? NRO account or SB account or cash will be paid in rupees by credit to NR accounts of the beneficiary only. This should also apply in cases of death claims being settled to resident assignees and nominees. I mean, non-resident assignees and nominees. The non-resident nominee cannot say, I didn't know that in case some death claim takes place and the premium have been paid through cash or SB account or NR account. The nominee cannot say, I didn't know anything about it. You please give it to me in my NRE account. No, we don't see who the beneficiary is. We only see how the remittances has been made. So NRE account is of utmost importance. Okay, fine. I think I have covered two very important topics. This is a circular issued again by CRM, crediting annuities of non-resident Indians to NRE account. I told you before it is possible. This talks clearly about that. How this circular clearly talks how it can be paid into either NRO or into NRE. If he wants in NRE, the check should be in NRE. The single premium annuity check which you pay as a remittance initially should be in NRE account only. Yeah, next. See, it has been decided that annuities can be credited to NRE account only if the installment premium has been received through NRE account or through instruments drawn in foreign currency. Even if any single installment is not paid from NRE account or through installments, drawn in foreign currency, entire annuity amount is not eligible for credit to NRE account. This is applicable for both annuity and regular plans also. So ensure that 100% NRE account is used. Now comes the most important thing. At source tax deduction takes place in annuity that are paid to NRIs. Deduction of income tax on payment of annuity to non-resident Indians under annuity plans. Deduction of income tax on payment of annuity to non-resident Indians under annuity plans. Now this circular says where depending on the aggregate amount, the 30.9%, 33.99%, 35.535%. We are talking about almost 1/3 of the annuity amount being deducted at source as per section 195. Is there a way out? Yes. The second page of the circular provides a way out. Next screen, please. The second page of the circular says where the NRE recipient submits a certificate issued by income tax assessing officer under section 197. Section 195 says a tax should be deducted. Section 197 says he can submit a certificate issued by income tax assessing officer under section 197 for payment of any sum without deduction of tax or deduction at a lower rate. Tax shall be deducted as per the certificate as long as the certificate is in force, suggesting that the NRI can approach the income tax assessing officer in India, apply for a certificate, tax exemption certificate under section 197. The tax exemption certificate can be given for, kindly mute your mic please. The tax exemption certificate can be given for 0%, 5%, 10%. This has to be obtained from the income tax assessing officer. How they give it, I don't know. Maybe the policy holder or the agent should contact a chartered accountant who will be able to help them as to how such sort of a tax exemption certificate can be obtained by the income tax assessing officer. And these tax exemption certificates are valid for a particular period, 1 year, 2 years, 6 months, like that. As and when the tax exemption certificate expires, then again they have to get a fresh tax exemption certificate. Okay, so this is how the tax exemption certificate works. For annuities, you can upfront give a tax exemption certificate along with the proposal form itself, so that for that particular validated period of the tax exemption certificate, you will get exemption. Subsequently, you have to keep on renewing the validation certificate. Okay, yeah. Next screen. Yeah, this is as far as the second part is concerned. Vamsi, we can go to the next screen. We talked about
one
two.
Second. Sir,
Yeah.
I'm just muting everybody.
Yeah.
For 1 minute. Sir, you please unmute once again. Yeah. You please unmute. Just 1 second, sir. I'm giving you. Okay. 1 second, sir. Because people are. Now you please unmute, sir.
Right. Okay. Yeah. So we have talked about two parts now, very important parts. The first part is about the statuses, about the income tax implications, about the bank accounts. The second part is about the life insurance memorandum, which talks about how exactly the maturity or the claim amounts can be credited into NRI account so that you can take it back. Okay. So this is absolutely required. You just have to really remember this when you make a sales pitch to the prospective policyholder who is an NRI. Now, the third is we come to the underwriting guidelines. In NRI and LIC's context, you should have a valid passport issued by the government of India. I told you NRI will have an Indian passport, FN will have a foreign passport, FNAO will have a foreign passport with a PAO card, OCI will have a foreign passport with an OCI card. Okay, these are documents. He should have a valid passport issued by government of India, should not be a green card holder or not applied for citizenship of other countries, suggesting if a person is an NRI and he has applied for citizenship of other countries, at that point of time, you should not give a proposal. The old 1993 circular issued by LIC says this first two lines only. The person should not be a green card holder, not applied for citizenship of other countries. You can ask me whether there is a column in the proposal form. The matter is, you should not give a proposal form to that person. While you canvass itself, you should ask him, are you an NRI? Yes, sir. Have you applied for citizenship of other countries? Yes, I am awaiting that country's citizenship. Then don't give. Okay. He could be an NRI at that time, Indian citizen only. But our rule says this. Indian policies, LIC of India issues in Indian currencies, whereas LIC international branches issue policies in local currencies. Okay, fine. Next. Now, there are two ways in which business can be done for this NRIs. First is called visit to India. That is, they come to India during a holiday, or they want to visit their parents. They come here, you canvass the policies, treated on par with resident Indians, all formalities to be completed during their stay here. Okay, that means all special reports wherever applicable, all plans applicable, all these things are allowed when they come to visit India. Again, at the cost of repetition, see, the COVID guidelines have virtually turned certain things differently. Somewhere we always say it is allowed only under medical, NRIs are allowed only in medical, 15 days port of entry into India, term plans not allowed, mail or business, all those things are there. You should keep a watch on those revised COVID guidelines, which we keep on introducing, because that is the order of the day. But these are basics. These are basics which are, as far as NRI underwriting is concerned. This, along with the latest COVID guidelines, it has to be applicable. Don't treat this separately and that separately. Whatever I'm telling you are the basics of an NRI marketing. Over and above, keep on adding that COVID guidelines or any other plan guidelines or any other specific mail order business guidelines or NRI guidelines. These are basics. Those are to be added. Treated on par with, all formalities can be completed here. You do the medical reports, you sign the proposal, you pay the amount, all those things. In their country of temporary residence is called mail order business, suggesting the person does not come from that country. He stays there in USA or UK or Japan or China or Australia or Singapore. He stays there itself. You send a proposal form from here. All formalities are completed there. There are two types in this mail order business. One is with agent, other is without agent. What is with agent? With agent means the agent goes to that country. The agent goes to that country, carries all the proposal form, completes all the formalities, including special reports, if any, and then comes back and submits the proposal. Or the second is agent also does not go. He does not go. He sends proposal forms from here, and they fill all those things and then take all the special reports from their place itself and sends it across. Now, in this mail order business with agent, when the agent goes there, he witnesses wherever it is required, no issues. If the agent does not go, the agency code still remains. The policy will be completed under that agency code only. But who will witness? For that, we had specified some 4 or 5 key officials. A judiciary or a notary, what we called as notary here. There, I do not know which name it is being called in those countries. That sort of a notary person, or an embassy official in that country where he is staying, or a bank manager where he is having a bank account in that place. If he is a student or a child, then dean or principal of the college school. And the last is a medical doctor, a medical examiner of 10 years standing. These are the 5 people who are primarily allowed to witness the proposal in case the agent does not go, policy order does not come. It is called mail order business. They stay there itself and fill all those things and gives it to us. A judiciary or a notary, as we call it here, what we call there, you check it. Embassy official, a bank manager of that where the person holds the bank account, medical examiner of standing, or a dean or a principal if it's a major student or minors policies. This is how mail order business works. There are certain conditions are there for mail order business. All these things has to be taken care of. The proposal can be sent here. The signed proposal and other reports, it should not be scanned and sent. It should be physically sent by airmail to here, and the policy gets completed here. Okay. This is how the mail order business works. Now, NRI, NMS, subject to the existing COVID guidelines. Good. Okay. Notary is called a commission in USA. Well and good. It is allowed during visit to India. See, again, I am saying these are basic conditions. You should see the latest COVID guidelines. NRI, NMS allowed during visit to India. If agent visits the country of residence for mail order business, if he is eligible for NMS, it is allowed. Maximum age entry is 50 years. Even for Indians, the maximum age entry is 50 years. For NRI, non-medical, employed in government or reputed commercial firms and professionals. Okay. Keep this on one side. Apply the COVID guidelines also. Recently also, we have issued a COVID guidelines. Keep that into consideration. Circular number 310. It has to be matched at any point of time. Yeah, with the revised COVID annexure. Now, this is an old circular of 2016. Still, it is valid. We have not revised it. Non-resident Indians and foreign nationals of Indian origin. I request each and every field force to have this circular in hand. It's a 8 or 10 page circular. It talks about everything. Non-resident Indians, mail order business, foreign national of Indian origin, non-medical, medical, everything. Now, the first and foremost is all people living outside our India, outside countries are categorized into 5 groups. Group 1, Group 2, Group 3, Group 4, Group 5. How LIC has designed these groups? Groups based on the socio-economic political profile of that country. Okay. Group 1, highly risk. Group 2, somewhat risky. Group 3, risk a little bit less. Group 5, least risk or almost no risk. Some 141 countries comes under Group 5. Most of the countries which we know per se comes under this. Now, depending upon the group countries in which they are coming, there are some restrictive elements in underwriting. In Group 5, 141 countries, I told you, they are almost on par with India. NRIs, FINOs and OCIs coming under these countries, they are allowed almost everything, so to say. For Group 1, Group 2, Group 3, Group 4, there are some restrictions on the plans. There are some restrictions on the term allowed. There are some restrictions on the sum assured. We have a circular. Annexure is given. Along with the circular, each and every annexure where each group countries are given. The first question along the agent has to ask is which group country you are coming from. Find out the group, which group it comes in, and accordingly under that group, whatever is eligible only has to be given. Okay, yeah, go ahead. It talks about reclassification of countries into 5 groups. It talks about the maximum sum assured allowable per group in all groups. Group 3, it says 150 lakhs is the maximum allowed. Group 4 countries, 250 lakhs is the maximum allowed. Group 5, there is no limit at all. It depends on his income. Non-medical scheme is allowed. Yeah, next. Residence Group 1, you see, this is how the annexure goes. It talks about these are the countries which come under Group 1, 18 countries. Maximum policy term is only 15 years allowed. Maximum sum assured 10 lakhs allowed. These are the policies only allowed. You simply have to go to this annexure. That's all. I'm not going to describe it deep. You don't even have to remember this. Ask them which group country they come from. Go to this, find out which residence group they belong to. Find out whatever is eligible. You will do it. Yeah. Next. Residence Group 2. Some 39 countries are available here. Yeah. Everywhere at the bottom we have given what is allowed, what is the maximum term allowed, what are plans allowed, what is the maximum sum assured allowed. It is absolutely necessary that you understand this, and accordingly only you give the proposal to them. Okay, next. Group 3, some 7 countries are allowed. 3% resident extra is charged because an HIV questionnaire is absolutely required if they come from these countries. All these things are applicable. Riders, only PWB and AB rider will be allowed. No other rider, term assurance rider or those things not allowed. Critical illness rider not allowed. Residence Group 4, 53 countries come into the picture. Yeah. HIV, wherever we have put HIV questionnaire is required. Yeah. Next. 2% extra is charged. These plans come into the picture. All pension products without any life cover can be allowed without any limit, without charging, but not foreign national of Indian origin. Everything is very clear. I request you to go through this. As a matter of fact, you will not get any doubt if you go through this circular. Yeah. Next. Here, sorry, 121 countries. I made 141. It's 121 countries. Group 5. Almost all the countries which we know come under here. Yeah. And next screen. Next screen. See here. Proposals from NRIs residing in the above 121 countries can be accepted without charging any extra. Riders allowed, new term rider, PWB rider, AB rider, riders allowed to FNIOs, PWB rider only case of proposal. All the extremely beautifully drafted and beautifully given. So this 2016 circular is a Bible for all these things. So at best, you have to ask them which group country they came from. These are some additions depending on certain new countries that they come, even cities also. We have said something like registration extra required, registration extra not required. Okay, this is absolutely required. You have to keep it in hand. Mail order business, it talks about that 2016 circular only I'm showing. It talks about mail order business, and we will share this presentation to all of you. Mail order business will not be allowed to foreign nationals of Indian origin as per the existing practice. All these things are clearly given here. What is the minimum sum assured required for NRIs under a proposal? What is the minimum sum assured under mail order business? As a matter of fact, I want to clarify certain things when this comes. There has been quite a bit going around. When I say minimum sum assured under mail order business, it means minimum sum assured under a proposal. So minimum sum assured should be 10 lakhs. There is a logic behind all these things. We are giving him the privilege of taking the business without even coming to India. So we at best say that minimum sum assured under one proposal should be 10 lakhs. You should not go for it. Just because Jeevan Anand is having 1 lakh sum assured doesn't mean that you should go for a 1 lakh sum assured. And one more thing, if I say minimum sum assured under Jeevan Anand is 1 lakh, presently it is 1 lakh. What does that mean? Your proposal minimum should be 1 lakh. You cannot give two proposals of 50,000 and say that, sir, both put together is 1 lakh. That is not the case. Minimum sum assured means under that proposal, it should be minimum whatever we are seeing. Okay. Yeah. Next. Yeah, I think we should go to the next slide. So before the next presentation comes, see, I want to again reiterate whatever we have said on. See, procedure for mail order business. This is a beautiful annexure which talks about, I told you about all these things. The signature of the proposer on the proposal from be witnessed after verifying the proposer password. These people can do designated official of Indian Embassy, diplomatic representative, medical examiner, dean principal, all those things. These are all given. But I can tell you, I will not elaborate. Quickly, there has been in many sessions which I have conducted in the last 3 months, people have said to me that there are certain difficulties in getting these specific persons to witness the proposal. Mind you, very soon, very soon, you will get some relaxation in this. Okay, I will tell you that. Wait for the circular. That much I can tell you. Yeah, favorably, we are reviewing it. Yeah, next screen, please. This is the memorandum. This is that life insurance memorandum. I told you whatever RBI circular has issued in 2003, we have given it as an annexure in our circular. The purpose is that life insurance memorandum, whatever it talks about, it has to be upfront told to the customer. As a matter of fact, in Kerala, state of Kerala, our divisions in Kerala, there is a practice that along with the proposal, this life insurance memorandum also, the copy is signed by the proposer and handed over to along with the proposal, saying that we are aware of it. Okay. In many parts of our country, other divisions or branches, we don't follow it. But my Kerala friends still say that this LIM is part of the proposal and it is signed by the initialed or signed by the customer. Okay. GST will be applicable as of now. NRIs also have to pay GST. That is the rule now. Yeah, as of now. Just mark my word, as of now. Today at 7:15, as of now, they have to pay GST. Yeah. Yeah. Yeah, these are that annexure LIM. Yes, you can go ahead. I'm just giving you this information. Now we come to the second most important status, which is FNIO, because we are concerned with NRI, FNIO, and OCI. FNIO, why a person takes this status as an FNIO? I told you, Government of India tells them as PAO or persons of Indian origin, whereas we call them in LIC as FNIO or foreign national of Indian origin. Primarily to open and maintain bank accounts in India, make investments in shares and securities in India. A foreign citizen is deemed to be an FNIO if he satisfies either of these three conditions. He had held an Indian passport at any time. He was born in India, probably that's why he got that passport. Self-parents and grandparents were citizens of India earlier under the Constitution of India Citizenship Act, or spouse of an Indian citizen or a spouse of an FNIO is also an FNIO provided bank accounts are opened and investments done jointly. Again, at the cost of repetition, merely because he is satisfying these conditions does not qualify him as an FNIO. He does have to show a record saying that he is having an FNIO document or a PAO card. Now, what is happening is, instead of the 5 layers, resident Indian, non-resident Indian, FN, foreign national of Indian origin, OCI, this foreign national of Indian origin is slightly going away. Government of India, from a foreign national, based on its precedents, they are directly applying for OCI also. So slowly and surely, PIOs or FNIOs are not available anymore. They either convert themselves into OCI. NRIs directly, after getting the citizenship of that country, immediately apply for an OCI card. So if you meet an NRI, there is every possibility 9 out of 10 NRIs will be having an OCI card. Okay, ask them, you will get it. Okay, yeah, next. See, this is the card I was telling you, persons of Indian origin card. Earlier also they used to issue this. It has a visa period also. It is issued by the first secretary of Embassy of India, where the country he resides. This person must have been residing in Washington. He goes to the Embassy of India, first secretary, Embassy of India, and gets this PAO card. Okay, yeah. Now, the last is overseas citizen of India, granting of dual citizenship. Legislation was passed in Parliament during December 2003, operational from December 2005. I think the screen is missing here. Applicable for FNA of certain countries, Indian citizens taking up facility of FNAs of 16 specific countries. Now, directly from NRI to FN, from FN, they directly get OCA card. Yeah, next screen. This is how the card looks. Okay, the OCA registration card. It looks like this. See, certificate of registration, OCA card. You can very well, you are at liberty to ask them to show you the OCA card. Many a time, OCA cards have to be submitted along with the proposal. People who apply for Jeevan Shanti or Jeevan Akshay 7 annuities, OCA card holders are allowed. We at Central Office only underwrite that. It comes to Central Office, but we insist that the OCA card holders, the foreign nationals or FNIOs, if they have an OCA card, they are eligible for this annuity. Yeah. Next, what are the benefits for this OCA? On par with NRI. Government of India says they are on par with NRI for facilities available in economic, financial, and educational fields. They don't have voting rights. They are not eligible for public employment because they are having a foreign passport. They are not eligible for voting rights, not eligible for public employment. Next, in LIC, what we ask is the OCA card has to be submitted for consideration. Okay. Now, this is the requirement. These are the 5 statuses: resident Indian, non-resident Indian, foreign national of Indian origin, or otherwise called PIO, and OCI. You have to find the nationality or the status from them. Don't guess. Bank accounts that are being used: NRO, NRE, and FCNR. NRE account, make it a primary point to remit right from the first installment to the last installment. Tax implication, section 1010D applicable to us, it is applicable to them also. And NRE remittance into NRE account is possible if all premiums are paid in NRE account. And last but not the least, FNIO and OCI COVID guidelines has to be necessarily integrated with the regular information that I have given you. Right now in 310 circular, we have relaxed through the COVID guidelines also. Previously, an NRI, when he comes to India and wants to take a proposal, he should minimum wait for 15 days from the date of port of entry into India. Subsequently, only he can take it. Now we have relaxed it, saying that if he is having an negative RT-PCR and double vaccinated, that 15-day waiting period is not there. Similarly, he comes here, submits all the requirements, and even before the proposal is getting completed, if he flies back to that country, no issues at all, the policy can be completed. If any further requirements, underwriting requirements like medical requirements come, some HbA1c we want, or some repeat ECG want something, the NRI, he has already flown back to this country. From there itself, with a fresh VMER and the requirement, HbA1c or repeat ECG or CTMT, whatever we call it, he can submit from there itself and the policy can be completed. Okay, fine. So these are, keep a watch on the COVID circular. See, COVID questionnaire is not the only one you should see. The COVID questionnaire should be seen in conjunction with whatever we have given in the circular. So this is how the NRI marketing goes. Yeah. Thank you. I think I have ended my presentation. Thank you for the opportunity.
So once again, unmute yourself, sir. I've given access to everyone for any queries.
Yeah.
So if you have any queries, you can ask. And people who are watching on YouTube, friends, you are given a link. You can send your query there, and immediately you will get an access to join the Zoom. You can ask sir directly. And these presentations will come to you directly.
Hello, excuse me, sir.
Yeah.
I just wanted to ask you one thing. If a NRI person comes back after, say, he has taken a 15 years plan, but after 10 years he's come back here.
Yeah.
And he has closed that NRI account now.
Fine.
So what will happen of his maturity amount, sir?
He has
come back from
I know.
that.
He has come back to India. So he becomes a resident Indian, right?
Yes,
he has closed his NRI account and he opens an SB account here. So at the time of maturity,
and remaining 5 years is going to pay from this account.
Let him pay through SB account. Let him give, he can give an SB account as left mandate. We will pay the entire maturity amount in SB account.
NRO account.
No, he will not have an NRO
SB account.
because he has
SB account.
Yeah,
correct,
we will pay the entire claim amount.
Whatever. Thank you very much, sir.
You're welcome. Yeah.
One more question, sir.
Yeah.
If NRI is married to Philippines girl,
Huh.
and he wanted to keep her wife as a nominee.
Huh.
So what is the things? Can
Uh,
we give him
No,
as a nominee?
no, nominee is not an issue. Nominee
Huh.
can be anyone. No issues
Anybody.
at all. Anybody.
But then my thinking is he should pay from NRE account only.
Naturally.
Because whatever happens, if anything happens to it, the wife is going to come back
You
India.
got the point.
And she
Exactly.
don't have a PAN card or anything like that. That on a death claim, it will be a big problem. So I think it is better that I advise you to pay from NRE account only.
And everyone, irrespective of whatever happens or not happens, any non-resident Indian and outside person, ask them to remit premiums through NRE account only. That should be the Tarak mantra. Nothing more, nothing less. Yeah.
Now, if he comes after that, and can he take the NRE money from his current account, transfer it, because he's at the time after the maturity comes back here. So on the maturity, he gets money in NRE account.
No, I didn't get your point. See, when he
See,
comes back means why he
after the maturity, he has come back here.
Okay.
So that amount, how we can convert it to Indian rupees then?
No, when he comes back to India, the banking regulations will take care of it. That's all.
Care of.
After that, the banking regulations will take care. Okay. Yeah.
Sir, good evening, sir.
Good evening.
Good evening, sir.
Yeah.
Sir, if suppose the person is residing in Canada and their fathers and grandfathers are in India, that their child, they want to do a policy on their child, can they do that?
The child is a minor. It's a minor or a major?
Yeah, so it's a minor. It's a minor.
Minor. What is the status of that child?
They have a OCI card. They have OCI card.
They have an OCI card. They means that child should have an OCI card. Huh?
Yeah. The child also have. The child also have.
Yeah. If you
but they don't have this one. But they don't have any Indian power. They are FINO, Indian origin, but they don't have Indian passport. They have citizenship of there.
Actually,
they want to do it.
See, two things are there. If the person is an OCI, they will have a foreign passport only. So the minor, the child, is having a foreign passport with OCI card. So along with foreign passport and OCI card, the child can be given a policy. No issues. Yeah, it can be given.
If the child don't have OCI card, the parents have then?
No. If the child doesn't have an OCI card, then what is the status of that child? A person can
foreign
citizen. Foreign citizen.
Yeah.
Not even FNIO.
But their origin is from India, no?
That is okay. I am telling you. No. That child is a foreign national. You tell me these 5 only. Whether the child is an NRI or a foreign national or an FNIO or an OCI. In these 4, which is that child? If the child is a foreign national, no, we only on a case-by-case basis we will give. We might refuse also. Okay. It should be either an FNIO or having an OCI card. Only then proposal can be entertained. Okay.
Well, FNIO means FNIO. Those person who are FNIO, they have a passport of Indian passport. They have.
No, they will have a foreign passport only. FNIO will be having a foreign passport, not an Indian passport. Okay. See.
They don't have.
Basically speaking, what happens is, just because their parents are Indian citizens, we deem them as an FNIO. The child, because the child is born to an Indian parents and the Indians are citizens right now. You say they are citizens here. We deem that child as an FNIO, as a matter of fact. But I would rather prefer to say that the child, if it has to be called as an FNIO, it should have a PAO card. It should have a PAO card. That only it says it's a person of Indian origin. Okay. Yeah. That's how the government goes.
Yes, sir. So as per your explanation, so if the child don't have OCI, they can obtain POI from the embassy.
Yes. Through that embassy, and then through PAO card, you can give the proposal. No issues. Yes.
Yes, sir. Thank you, sir. I got that.
Welcome.
Sir, good evening.
Good evening.
Sir, I just wanted to know this section 1010D benefit is applicable to NRIs also, right?
No, I didn't get you. Someone was cross-talking. Section 1010D is applicable to
NRIs also, right? Majority
NRIs also, depending on your premium should be within less than 10% of the sum assured. That's all.
If it is 10%, then no tax on that, right?
Yeah, exactly.
Okay.
Yes.
That was
so tax laws are based on the instrument, not on the status of the individual. Yeah.
Okay. Thank you, sir.
So one more question, sir. Forward, sir. Sir, if the OCI holder and have a POI if they do not have account in India, then how they will credit that amount?
They have to have an account in India. There's no alternative. See, because LIC remits the amount, doesn't remit the amount to a foreign bank account. It remits to an Indian bank account only. So they should, if they want to take a policy and they want the remittance to be in India, they should have at least an NRI account. They should have NRE, non-resident external.
Can they cannot channelize the payment through their grandparents?
They can do, but what is the status of the grandparent? Are they Indians?
They are Indian. They are Indian.
They can pay, but the point is the maturity will come back to, will remain in India only. I told you now how the remittances are made. See, point is you are suggesting the child is foreign. He or she doesn't have a bank account. The grandparent will pay from here. Tomorrow the maturity amount will go to the child only, not to the grandparent. Okay. Then we will see how the premiums have been remitted. Premiums have been remitted in Indian currency, so it will remain in India. The child has to open an Indian bank account here. No alternative.
Or that will be the problem for you.
Yes, exactly. Okay.
Sir, good evening, sir.
Yes, good evening. Yeah.
I got a small clarification, sir.
Yeah.
One of my agent policyholder is staying in Myanmar, Burma.
Okay.
He want to invest in Jeevan Shanti.
Fine.
So actually, recently I submitted the proposal. Proposal has come to central office. But deferred, and he want deferred annuity of 10 years. How to go about it?
What is the status of that person?
He is Indian. He is working in Indian company at Burma.
He is an Indian. How long
Indian. He is now status is NRI.
No. See, point is, if he is working in that country, he cannot be an Indian. You and I only are working here, so we are an Indian. He is in Myanmar. He might be an Indian by birth or something. But what is his status? Is he an NRI? Because he is non-resident. He is residing outside India. He should be an NRI. Huh? If he is an NRI, there is no Jeevan Shanti deferred annuity, no difficulty. Why it came to central office? I don't think he is an NRI.
Myanmar comes under group 2. Our divisional office people, that branch people and divisional office people.
Fine. In group 2, what is written? In group 2, there may be some restriction. I don't remember what it is. You have to see the group 2. In group 2, what is it written? Any restriction is written on the Jeevan Shanti?
There is a 5 years only deferred annuity.
Exactly. Simple. We go by that. So he cannot ask for a 10-year because of his resident status in Myanmar. The maximum we can give is only 5 years. Yes. The rules says we can't help.
Yeah, he requesting. He has given a letter also requesting for 10 years because of this COVID, he is not able to come to India. That's it. Because his age is 39 years now. He don't, after 5 years means there is I don't require the money.
See, if there are some compelling restrictions, requirements which can be established by his representation, we can always look into it. But normally speaking, we go by the rule book. Only in extraordinary circumstances, he has to establish the fact why he wants or other things. I do not know what sort of a representation he will give. Merely saying that because of COVID guidelines, I'm not able to come to India might not hold good. He has to give a real reason as to why he wants a 10-year when the rule clearly says that because he is in a group 2 country, we are restricting the deferment period to only 5 years. Yes. So we have to take a call on that.
Okay.
So I have a doubt.
Yeah.
So I understand it is advisable to pay from NRE account, right?
Yeah.
But suppose by any chance, suppose if proportion amounts are paid from NRO and NRE, like what you said, 7 upon 20. In that case, sir, maturity comes, then LIC will give part amount for, how they will give to bankers?
Wait, I'll tell you. LIC, if you want the full amount to be credited through a NEFT mandate to a bank account, we will use only NRO. We will insist that you give NRO account only because the entire installments have not been paid in NRE. Okay. For us, paying in NRO is not an issue. So we will insist to pay in NRO. If it is acceptable, the policyholder can give a NEFT mandate for NRO, get the remittance in NRO, go to RBI, explain the special circumstances, whatever it is with him, and maybe take a special permission for repatriation to that country. Okay. Right.
Yeah. Sir, in that case, what I'm asking, suppose if LIC is supposed to pay 7 upon 21, 14 upon 21. Okay, because he has paid part amount from NRO, part amount from NRE. So in case of maturity, how he is going to get the claim?
That's what I'm saying. One is through full amount through NRO account, but he
Right.
doesn't want in NRO account. He wants in
He wants
NRE
proportion.
account. Wait.
Yeah.
If he wants in NRE account, he has
Right.
to make a request to the senior division manager of the division to get the maturity amount in check, specifically saying, sir, I am outside, I need it to be repatriated, I need this credit in NRE account, but LIC will not give an NRE account because I have not paid the entire installments, but I would like to take it up with the bank. So please provide me the maturity amount in check. As a special case, we will provide the entire check, 9,75,000, for example, to him. He will go and remit it to the bank where he is having NRE account. There also, as per the circular I told you, the bank manager will 14/21 proportionately out of that 9,75,000, he will credit it into NRE account. Remaining 7/21 balance, he will credit it into NRO account only. This
So
is
that
how
bankers
will do. Yes.
Okay.
That the rule says that only. The circular is meant for that bankers only. Yeah.
Fine. Sir, another doubt. Whatever status you mentioned, like NRI, Indian origin, whatever, FNIO, these are as per the citizenship and nationality of the country. It has nothing to do with Income Tax Act, right?
Okay. Yes.
It does not. This is not having any status as per Income Tax Act, right?
In what context, you tell me? I mean, you are giving a generalized statement. In income tax means, are you talking about any income tax exemption or Section 1010D or ATC or ATD or?
This is status I am talking. Status according to the passport and visa, right? As you are talking.
No, see, point is, yes, the income tax exemption for ATC and ATD, income tax laws as per India, I'm not talking about that country's law. Our country's law like ATC, ATD, 1010D, all these things are irrespective of the status. You are absolutely right. The same is applicable to resident Indians, the same is applicable to NRIs, to FNs, to FNIOs, to OCIs, all. Yes.
I understand. Okay.
Yeah, right.
Okay.
Next, please.
Sir, good evening, sir.
Good evening.
Sir, how are death claims dealt, sir? Is normal process, or if a customer asks about death claim, how should I explain?
Same rule only. If the customer has paid in all NRE account right from the first installment till that last installment before the claim took place, if he or she had paid in NRE account, the nominee can ask the claim to be settled in NRE account. If by mistake, unknowingly, knowingly paid in NRO account or SB account of father, mother, etc., the nominee can, the death claim amount will be paid to NRO account only. Same, whatever rule is applicable for maturity is applicable for death claim also.
Sir, then how are these deaths verified, sir? If it's like accidental or natural?
You mean to say if the risk takes place in that country, yeah?
Exactly, sir.
Now, in that country, we ask for the death certificate. We ask for, in case accidental, something similar to, we have something called first information report, postmortem report, and police investigation report in India. Similarly, on same line, something would be there in that country. So they have to establish with those documents that the death has taken place due to an accident. What exactly are the documents that are given, I do not know. So, but something similar to what we ask here, same will be asked for that also to establish that the claim is due to an accident. Yeah.
Sir. Thank you, sir.
Sir, what I've understood, what you said, can I say it is simply to have nominee also to have NRO, NRE account, and because ultimately they are also receiving money on death?
See, basically speaking, an NRO account can be a joint account between a non-resident Indian and a resident Indian. Okay, that's how banking rule says. NRE account can be a joint account between an NRI and an NRI. NRE account. It can be separate also, but it is absolutely necessary because in LIC, everyone takes a policy thinking that it either way can happen. They can live to see the maturity or otherwise. So the nominee also should be part of an NRE account, joint or otherwise. Yes.
Okay.
Sir, good evening, sir. I'm Raghu here from Bangalore.
Yes, sir.
See, if the Indian citizen got married to a other citizen, and if they are settled in India, then can we give the policy for the NRI other citizens, sir?
No, the point is the person is an Indian citizen. The spouse who was a foreign citizen and who has come and started living in India, that person, is that person retaining that country's citizenship, or because of having lived in India for more than 182 days in a given year, have they become an Indian citizen? What is that status? On that basis only we can decide whether policy can be given or not.
from past 2 years, they are settled in India only.
So
They're
you
applying
asked
for
that.
Indian.
So you ask that spouse what exactly is the present citizenship status. If it is an FN, that person still continues to be a foreign national, then you can give a proposal, but it will come to us only on a case-to-case basis only. We will decide that.
Thank you so much, sir. Thank you for this.
Yeah.
Thank you.
Sir, what is the maximum amount we can give in mail order business?
I think that circular says something like 1 crore. I don't remember exactly. You please see that circular. Some maximum limit is there. Minimum is 10 lakhs. Maximum some limit is there. Yeah. You please have to refer to that circular because I don't remember. I only remember concepts.
Okay,
I don't
sir.
remember circulars. Yeah. But maximum sum assured is given in that circular. Yes.
Hello, sir.
Yes, sir.
I am Harish Pai, development officer.
Yeah.
Sir, I have a client whose son is having a green card
Whose son is a green card holder. Okay.
holder in America.
Okay.
Yeah. So can we give Umang policy to him?
No, if he is presently right today when you are trying to sign the proposal, if that person is a green card holder, then it is suggesting that he has applied for that country's citizenship. You cannot give as per our circular. But the proposal does not contain anything. The proposal that you cannot give. The circular says you should not give. That means your agent is supposed to inquire and be far away from him now. Yeah.
Yeah. So we are losing some business that.
But that you see, these are policy decisions. For some reason or the other, it has been taken. So,
sir, another question. If I am giving him Umang policy and later he become FNIO, what would be the implication, tax implications to him?
Nothing. See, we are not going, just because he has taken a life insurance policy, we are not going to prevent him from enhancing his career or changing his status for his better horizons. We are not going to do that. We always see the status as on the date of proposal and accordingly underwrite.
Yeah. Okay. Thank you, sir.
Welcome.
Sir, one more thing.
Yeah.
I have
Abhay, you just have to give a chance for others also. I will get back to you. Yeah. Yeah.
Okay, sir.
I'll get back to you. Yeah.
Yes,
and someone else, please. Yeah.
Yeah, Mr. Ramanathan Subramani.
Yes, sir.
Ramanathan.
Yes, sir.
Sir, are you able to hear me, sir?
Yeah, clearly. Go ahead.
Sir, one is the father pays the premium in Indian account.
Yeah.
From his check.
Okay.
All the premiums are paid in Indian check. Now, while giving the Jeevan Umang policy, 15th year, the survival benefit can only be given in NRO account. Correct, sir?
Absolutely correct. Because it is paid in Indian rupees, the remittances will go to NRO account only. Correct.
Next question is.
One more question, sir.
Yeah. Yes, go ahead. Yeah.
Sir,
Yeah,
if the resident Indian is there and he has gone to the foreign, becoming NRI, and he expired there in the new country, so what will be the nominee claim?
No, when he took a policy, what was he?
He was in India, and
Resident
after 1 year or
Indian.
2 years,
Subsequently, he becomes an NRI. See, the point is, this is a very good question which has been asked. There is no rules book available there, but I will give a suggestion. If the person was a resident Indian, took a policy, subsequently he becomes an NRI, nothing happens to the policy. We are not going to stop him from going abroad. But I would suggest the agent to advise the policyholder to give an NRI questionnaire at that point of time and submit it to the branch office giving the policy number. Why? Because tomorrow if a claim happens, the claim death certificate will come from that country. Our AO claims will look into the EDMS folder and see that there is no indication that this person has gone to abroad. We are not going to stop the claim. We will not do that. But we will ask additional questions to establish the fact that the person who risk took place abroad is the same person who is our policy holder. Because in our folder or in our policy, nowhere it is written that he has gone abroad. So an NRI questionnaire has to be submitted whenever a person goes outside. And in this case, even if NRI questionnaire is not submitted, we will ask additional parameters as to from the claimant as to why he went outside, when he went outside, for what purpose he went, whether he was living there for employment or business, when this death claim took place. All those clarifications we will ask and accordingly pay the claim. We will not stop from paying the claim. Yeah.
Yes, sir. And what will be the case for the OCI case? The OCI one?
All, it's the same only. No issues. It's the same.
Sir, I'm Ramanathan. Sir, can I ask a question?
Yeah. Mr. Ramanathan, go ahead.
Somebody said that we can scan the proposal to him and he can sign it and scan it back. Is it true?
No. You can scan the proposal and send. But signed proposal, physical copies only should come here. Signed and scanned proposals cannot come by email here. Because we are also scanning it again through EDMS once the policy is completed. So kindly ensure that signed hard copies are physically sent by air mail or post or whatever you call it and send it across to India.
Thank you.
Yeah.
So in a mail order business, it has to be signed in hard copy.
Yes, absolutely. Yes. Yeah. Anyone else? Vamsi, if anyone else is there?
Madam, please ask. Any doubt?
Sir,
yeah.
Previous question, NRO account is there, and our father was paid all premiums on Jeevan amount.
Correct.
So after 15th year, whatever the benefit will come to NRO account. Okay. If suppose that candidate or person of the 5 premiums was paid by NRI, then what will happen?
If 5 are paid through out of the 15 years, 5 are paid through NRE and 10 are paid through NRO, LIC will accept the NEFT mandate of NRO account only. We will say NR account only, we will pay the SB. But if he wants the SB to be credited to NRE account, he has to go to the bank manager only. And because it is not a one-time payment SB account, every time we cannot be issuing checks. So that will be a small difficulty, because in the maturity, once we can issue a check so that he can go to the bank and get it credited to his NRA account proportionately. But this SB will be coming every year. Then he has to make an application to us asking us to provide through check, and that he has to take to the bank, and their bank also proportionately only 10 by 15 and 5 by 15, that SB account will be proportionately only will be put into NRE and NRO. Yeah, this is the rule.
Okay.
Excuse me, sir.
Yeah.
What happened if it is early claim? IR. My point of view is IR. We will go to investigate the IR.
Claim,
Yes.
See, we instead of an investigation report, we will call for some additional documents which will be establishing the fact. Yeah. The claims department has certain additional documents requirements which will be supplementing or substituting the investigation report which are submitted in India. Yes.
Thank you, sir.
Yeah.
Sir, can we canvass Jeevan Umang for FNIO?
FNIO you can canvass, but he has to be in India at the time of taking the proposal, submitting the proposal.
Sir.
Yeah.
Thank you, sir.
Yeah.
So one Mr. Rajesh asking in YouTube,
yeah.
Client paid all the premiums from NRE account, but bank now says they have only 2003 to 2012 year data. 2000 to 2007, they don't have the bank data. So without bank letter, can we credit full amount to NRE account?
No, sir. Somehow he has to bring, the bank cannot say they don't have an data. Somehow he has to establish the fact, because we have no source at our end, and RBI guidelines are what should I say? They're sacrosanct. So we just can't simply, based on his representation, he can do. Somehow he has to get that some sort of he has to go to the RBI and maybe tell that this bank is not able to provide, though I have my passbook or something, some remittances, etc. Some sort of a via media they have to find out, because LIC. We are clear, we don't intervene into the banking regulations or RBI's guidelines, but we want this to be clear at our end. Yeah.
One more query. Should we get any initial permission from LIC branch before getting the mail order business?
No, not necessary. Not necessary. As a matter of fact, if agent visits the country, previously you used to say that they have to get permission from senior division manager, the agent to say that I'm visiting that country because I have to do mail order business. This is something like a no objection certificate which we employees have to get from our LIC if we travel abroad. So mail order business, I think it is better if an agent puts in a permission. Nobody is going to refuse it. So it's better if agent puts in a permission if he is going to visit the country for mail order business. If he doesn't visit, no need, nothing is there. Simply he has to send the proposal form and get back the proposal form and other reports. Yeah.
Before getting the proposal, do they need to pay any amount, something like that?
See, normally in LIC, one thing is very clear. Consideration amount is the first thing that should come in a proposal. It should not happen like proposal is filled, date, medical reports done, everything, and subsequently you give the money. First thing is consideration amount. So that rule stays even for Indians or resident Indians, mail order business, visit India, everything. An amount, consideration amount has to be paid upfront. Yeah.
Done, sir. I think no more queries.
Yeah.
Sir.
Yeah.
Sir, one more query, sir.
Yeah.
Can I ask? Ramanathan?
Yeah, please
sir,
go ahead.
Somebody said that you can scan the proposal and get it scanned by them, and then you can give it to your DO, and then they will decide upon the procedure. Is it so?
No, sir. No, then you just take it my word that you have to get physical copies only.
Physical copy only?
Yeah. Yes, sir. We are giving him the advantage of mail order business of not spending enough money of coming here. So at least he can do that air mail. Huh? Ask him.
Second question is, somebody said that video FMR can be done. If he is eligible for a FMR, video FMR can be done. Is it so?
Yeah, video MER is allowed. No, it's been allowed for the last 6 or 7 months. For so many months, we have been doing video MER. Yeah.
So if he is an NRI, he can submit the proposal in physical form from there itself in hard copy, and then a video FMR can be arranged and he can answer the questions, and that can be sent to us, sent to the branch. Correct, sir?
VMER is compulsory for NRIs. It's called video MER. It is compulsory for NRIs. Yeah.
Thank you, sir. Thank you very much.
Welcome.
Thank you.
Yeah.
So thank you so much. Exactly, we have completed 2 hours.
Yeah. Right.
Okay.
Yeah.
So any more queries, people will reach us through same channel, and we'll come back to you, sir.
Sure.
So friends, any queries, please ask. And the entire session is recorded on YouTube live. So you can just refer one more time. If you have any queries, you please go through it. And sir has given an absolute clarity on every aspect. Okay. So thank you so much.
Can I ask?
Yes, Abhay.
Abhay, last. Yeah, go ahead.
Sir, one of the client wants to give it back to the country. So he wants some tax to be deducted in his proceeds. So obviously I can't basically give any insurance plans, risk cover plans. Okay. So I have to go either for Shanti or Akshay. Now what I want to understand, is it 33% tax rate for TDS for Shanti and Akshay?
That is that circular says, depending upon the gross amount of annuity, 30.99, 31.39, 33.99, something is there. So accordingly, that much amount will be deducted at source.
Nothing like 10% or 20%, right?
No, in the sense, if you get a tax exemption certificate, then it can be lesser than that. But if you don't give me a tax exemption certificate from the income tax assessing officer, then as per our rule only we will deduct. Yeah.
Okay, sir. Thank you, sir.
Right.
Sir, sorry, sir. Again, Raghu here.
Yeah.
In case if you want to revise the policy of the NRI based on the Xerox copy, can we do it?
No. Revive means mail order business, huh?
No. The policy got lapsed. Now they are staying in US. Whether this policy can be revived.
That's what I'm saying. Revival also, you want to know whether mail order business is allowed. Basically speaking, revival is another underwriting only. But I think you have to check with manager CRM circulars. I should not, intervene on that. Yeah.
Okay, sir. Okay. Right. I will check it out with the CRM, sir.
Right.
Thank you, sir.
Welcome.
And thank you so much for your active participation. And you can subscribe to the channel so that you'll get information. Okay. So thank you so much for your valuable time and detailed guidance, sir.
Welcome. Thank you very much for the
opportunity. Sir, beautiful, sir. Absolutely very clear, and clarity is super. Thank you very much.
Thank you.
God bless you.
Thank you, MC. I'll log out now.
Thank you, sir.
Thank you.
Thank you so much.
Thank you, sir.